This is Alan Bush with ADMIS. In the stock index futures, we did see some pressure earlier this morning, and it did look like futures were underperforming the news. We did have some mildly bearish overseas news that apparently put some pressure on stock indices initially. Since then, though, we have seen indices coming back to basically unchanged on today. This market continues to be supported by the Fed's aggressive easy moves. Every month they buy $85 billion in treasuries and mortgage-backed securities, and I believe a lot of this money is finding its way into the equity markets. Over in the currencies, seeing the US dollar index holding up relatively well. Much of the recent strength in the dollar has been due to the higher interest rates that we have seen over the last 11 months. And I think this is a trend that is likely to continue. So from here, I would expect higher prices for the dollar index from an interest rate differential point of view. Over in the yen, we are seeing a bit of a bounce. Looks like there is some political resistance to all of the easy money that we have seen recently from the Bank of Japan. However, we do feel that the main trend is still lower for the yen. Any gains that we do see are likely to be opportunities to trade from the short side. And the pound now making a new low. Industrial production in the UK unexpectedly falling 1.2%. The guests called for a 0.1% increase. So from here, I would expect lower prices in the pound. So once again, we are looking for higher prices in the dollar, lower in the yen, and lower in the pound. And these are long-term trends. Over in the credit markets, after 6 days of falling prices, we are seeing some rebound today. Gains, though, are likely to be limited by the Treasury offerings that are taking place this week. The Treasury is selling $66 billion in securities, starting with today's $32 billion in 3-year notes. Longer term, we feel that the main trend is lower for the credit futures market, and any gains are likely to be selling opportunities. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.